Good morning, I think I'm live. And the markets will open in approximately a few seconds, 50 seconds. 1 second, I just need to launch Divergent. And should be live there. Okay, good morning, I hope you're well. The European markets will open in 3, 2, 1, go. I don't normally trade on Wednesdays with you, but I thought I would do it today, just because I had a strong inclination that good things were going to happen. I'm going to take some profit in the FTSE here. And that's what I've just done. I decided to push the long side pre-market and betting that it was going to hit the top end of the channel. I posted the trade in Telegram, but it was more like a scalp. I actually put some orders in to short the DAX just in case we're going to have a surprise at the open, like an espresso. So I put it below the 10-minute bar, but it doesn't look like it's going to happen, so I'll remove those. So good morning, I hope you're well. As I stated yesterday, I found the weakness in the DAX really peculiar, and I'm still highly suspicious of the price action in the DAX. But overall, still think the market's bullish. And that DAX position, sorry, that FTSE position is looking quite well now. So that was a good start. I think that was a good read of the market. But I did decide to close all my FTSE yesterday. And as you can see, I have withdrawn the profit so that there was no, the naysayers going, oh, you traded it outside of regular trading hours. Of course, which is fair enough. So I have some work. I want to show you. So what I want to show you is the DAX on the days of CPI, and this is going back. Just want to make sure that I can see the charts on my other screens. So if I do a laser pointer, so this is the CPI day in April. May look really weird, so I decided to ignore it. So this is how the DAX is reacting on a 10-minute chart on the day of the release of the CPI in April, which was the 10th of April. I'll just double check that I got this right. Yeah, so 10th of April. So there you go. Break of the first 10-minute bar creates, you have a positive bar, and then you break and you close below the first 10-minute bar. And then you see a really strong move down 100, 200, 300, 400, 500, 550 points. Now, obviously, this has to do with the tariffs, so let's take the month before. So this was March. There you have a gap up, and the first 3 10-minute bars are indecisive, and then you get a really strong bull close, and that sets in motion a move that ultimately left the low of the day behind it. Okay, so worthwhile remembering that. Just to show you what the FTSE trade is doing. So maybe I'm still of the opinion that we need to attack these highs here, which is why I see this high here at 8886. That was why. And then you got the weekly high at 8909, and I one of the reasons why I took profit in the FTSE yesterday was because the previous day's highs at 8825 had been superseded by quite a big amount, and I was beginning to look over here to the left. But I still think that 8909 is coming. Well, I'll hold this position. Obviously, now you're saying, why did you get out of my 100-pounder point? But that 100 was always meant to be a scalp open, while the 25 was more a, let's see if we are going to attack 89 today. So let's get back to the DAX. So here's the February. Did I miss one? Okay, so we discussed the March. So here's February. Again, you have about 2 or 3 bars of indecision, and then you have a push higher. But unlike March, you actually have a really protracted sideways range until the news is released. And then big drop and a recovery. And it's like, it just feels like you look at something like that and you can hope to God that you aren't involved in a trading day like that. Let's look at January. Again, you have 2 free 10-minute bars. Then you got a relatively strong, you get a strong bear close on the second, but then that's immediately reversed on a bull close on the third. And then that ultimately leaves the DAX behind and creates a trend day. A trend day is where we close at the opposite end and where we opened. And then let's go to December. Bull close, bear close, bull close. And that third bar ultimately leaves the low of the day behind, and you create a bull trend. A bull trend, but with a trend close. Although I don't think anybody liked to be sat in this protracted sideways range. So let's go to the November one, because that was different in nature. You actually had a push off the open, bull close. Second bar also is strong. Third bar negative, but doesn't even get near the close of the second bar low. Sorry, it doesn't get anywhere near the low of the second bar. And the market, the DAX, then continues up for 1, 2, 3, 4, 5, 6, 7, so another hour and a half. And then you actually see a reversal. Now, sadly, so this is a fairly neutral open. You see that was the previous day's close. But here, you don't actually get a sense of why it stopped where it did. And I couldn't tell you right now, maybe it's the overnight range. But either way, that high that you see there at around 9 o'clock, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Actually, on the it's closer to the 2-hour mark. It takes 12 10-minute bars for the 2 hours. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So it's just a little bit before 11 o'clock European time, 2 hours after the open. You actually see a significant reversal. Now, at the time, it doesn't feel like that, and our buyers are stepping in, and you get a 2 to 3 bar reversal. But when you begin to close below, that's quite an important point here. when you begin to close below that bull bar here and you do that there, that really does set in motion and accelerates the push lower. So it's worth remembering that. Okay, so, and of course all of these things always are so easy after the fact. So easy after the fact. So here's October. You get a very strong bear trend on the second, and that creates follow through on the third, fourth, and fifth. Then you get a bounce and a retest, and that retest comes approximately 3 hours after the open. After which that double bottom lays the foundation for a low, but ultimately all of this day is just one ginormous trading range. Tradable move, no doubt, but nevertheless a trading range seen after the fact. And then you have everybody's nightmare, unless they love to scalp, it's a sideways range. And you're thinking, God, if you traded through that, how did you manage? And then the news are being released. Okay. So let's just go through a few more. I think this one is a really good one because this would be the one on bar 3 that I'll be thinking, okay, we got a bull trend coming here. And then the fourth bar actually closes below the low of the third bar. And that sets in motion, oh, holy shit, we've been caught on the wrong side. And you get a 30-minute breakdown. But not exactly a barnstormer, is it? It's 20 points, it's 40 points, it's 45 points. So there you go. And then a recovery and then just sideways. How much more did I prepare? Probably a whole lot more, knowing me. Probably went down 3 years. Here, a very indecisive first bar, close. Second bar, bear trend. Third bar, go below prior bar, low. Push higher, but overall just a sideways trading range after the morning. Volume has tapered off, and then you don't really get anything until the news is released. I think that was the last one that no, of course not. Carry on. First bar, very positive continuation. Second bar close on its highs. Third and fourth actually see continuation. So if you see that in the context of where we are right now in the DAX, as we're moving into the second bar with 7 minutes to go on the 10-minute, be thinking, okay, let's be buyers. If we get a relatively good second bar close on the 10-minute, let's be buyers as perhaps an early, almost like an aggressive school run on the 4-5 minute, and in anticipation of a push higher. But let's just be mindful that we get any closes below prior bar low, such as we did here. It's a fairly good indicative sign that the market wants to change trend. Is this the last one? Yes, it is. Thank you. I didn't know if it was one of those presentations where I've just gone a little bit berserk and I just, prepared 4 years worth of data for you, which is what I normally do for myself to sort of develop a plan of what I want to do. So let's look at the DAX with so I had this idea that we were going to see some kind of shock move in the DAX this morning. Obviously, either way, yeah, I'll trade whatever comes my way. Shit, where's my water? Sorry, ladies and gentlemen, I'm just going to have a 1-minute break. I haven't brought my water. Been exercising this morning. All right, bottle filled. So I'm just going through a few messages. I've had a change of policy in how I deal with messages. So messages that I think that are indicative of the person not doing their own work. For example, one question I frequently get is, how can I get rid of the fear that I have of executing my strategy? A question like that, I don't answer. Because I'm thinking, I wrote a book, for fuck's sake. Dealing with that. So, just waiting now. Message here from someone called Ned. First time watching you on EU. I'm in US, can't trade DAX on my prop firms, but that doesn't matter. I love how you go through the historicals and discuss the thinking behind everything. Well, Ned, thank you so much for that observation. I'll tell you why I'm doing it. It's not that I somehow want to be able to say, oh yeah, I bought there, or you know, I stayed away from this trading session. It is actually more to formalize a plan on, well, how do I think I could possibly trade this trading day so that I stack the odds in my favor. It's not like I am pretending in any shape or form that I somehow had managed to anticipate that this was going to be the high of the day and we were going to go all the way down. Of course not. It's more it's a warm up, isn't it? It's a warm up, which is centered around, well, how has the market behaved on previous days in the past? And I find that really helpful. So thank you for that comment. Your comment resonates exactly with what I was trying to achieve with it, which was, uh, uh, well, Ned, you know, if you're up in America, that means it's very, very early for you in the morning, so you must be really dedicated. So anybody who wants to get up at 3 o'clock in the morning to listen to me, I think they deserve a personal shout out, to be honest. And so if you take, for example, the 14th of August 2024, there's not a living soul that could somehow predict that we were going to have uh, a 4-bar push higher, and then a retracement down towards the gap fill, and then back up again, and then a sideways match. No one. But at least it sort of gives you an idea of how you may be able to take a long position basis on the first few bars, and then how you would protect yourself in if it does in fact blow up in your face, as it does in this case here. Working in IRL, is that Ireland? I imagine it is. All right, well, have a good project, my friend. So the cynic in me is saying, all right, mate, do you think you should have considered? Do you think that you should have considered taking a profit up there? Now, I want to do something quite interesting with you. Okay, let me just show you something. Okay, so we can all agree now that I should have taken profit, right? All of us going, why didn't you take profit? Blind Freddy could have seen that. However, consider the emotional response if we do like this, okay? Now, does this change the picture a little bit? Does that change the emotional response? Were you beginning to think, oh, Jesus, why did you take profit there? It was such a strong move. Look at that. And I think that is such a telling, that's such a telling picture of how difficult it actually is to trade, because we are being forced frequently to do something that goes completely opposing what we want to do. Going, no, I'm not taking profit here. This baby's going higher. Look at that bull bar. But then, no. That's the reason why when I train, and trust me, I train a lot more than I trade. I pick random days, and I have this function here, and this is not even in real time. This is not a real time charting package. This is just delayed, but I love it because it enables me to go through a trading day like this, and then show one bar at a time. Okay, what would I do here? Okay, I'll tell you what I will do is, I know this is a bull bar, but you got overhead resistance. So either I sell short right here, or I wait for a push above this area here, and then I sell short. Okay, all right, and then I sit there and I draw and going, oh, okay, so I'm filled. What do I do now? Do I put a stop loss up here? How do I deal with this position here? And considering that's 100 to 300, 250 points away, I'm probably not going to have a stop loss all the way up here. And then I go, okay, how would I deal with this situation here? And if there's something I feel that I need to research, well, then I go away and I sort of take a screenshot of it, and I go, well, what am I possibly trying to achieve in this situation here? Is there something interesting about the time of the month? Okay, that could be because it is towards the end of the month and the market behaves in a certain way towards the end of the month. Is it is it a certain day of the week? Is there news out, and so forth? So I find that helps me tremendously in shaping my decision making. Oh yeah, that FTSE looked a whole lot better. Sorry, that was not the live chart. That FTSE looked a whole lot better earlier, didn't it? I'm just going to let it run now. Let's look at the DAX. So the second bar wasn't overly convincing. It was an inside bar, and right now it looks like we're going to close. So people ask me, hey, how do you get your ideas for research? Well, whenever I trade, I ask myself questions. And so one of the questions I could ask myself right now, and I'll tell you what I'd like to do, because I can keep an eye on this on a on another screen's on a screen picture. So if I look at the 10-minute chart, just let the data kick in, I would go through the month And I say, okay, let's look at the second bar. What happens on the second bar, which is the one we're in right now? What happens if we close above or below the second bar? Okay, so here we close below it, and that certainly sets in motion a lower move for the next 3 or 4 bars. And then I go through the chart. Okay, this one's probably going to be trickier. What happens if we close below the second bar? Well, we don't close there, we don't close there. There, we close below the low there. That sets in motion somewhat of a response, but also a counter response, as you see there. Then we go to the next day. Okay, here's the second bar. What happens if we close above or below the second bar? Okay, well, we do that here, and it sets in motion a trend move lower, not without a degree of counter move for sure. The low here is 592, the high is 641, so a 50-point counter move, but nevertheless, in itself a good signal. And we look at the next day. Okay, so here's the here's the second bar. What happens if we close above or below? Well, here we close above, and that sets in motion a significant trend higher. Yeah. Okay. Let's look at this one here. Here's the second bar. What happens if we close above it? Well, the second bar itself was a high bar, and we close way above that, as you see. So if you bought up here, which is when it closes, you'd just be in a sideways mess, and eventually you might be thinking, I'm going to move my stop loss up, or hopefully. And let's take the next day. So here's the first bar, here's the second bar. Do we close above it? Yep, we do that here. Does that set in motion anything? Well, the way I trade is I probably would have managed this to have an insignificant loss. Flipping the switch, do we close below it? Yeah, just about there, which is about the low of it. So this is a brilliant example of, okay, that hypothesis doesn't seem to work very well. Now this is relevant considering that right now the DAX is on track to close below bar number 2. We go to the next day. Do we close below the low of bar 2? Yeah, we do, but not until all the way down here. So if you're a seller down here, okay, you actually manage to be the one that sells the low of the day. Perhaps not the best feeling in the world. And then you get a close above it here. And that, you see how you close above the high of the second bar. I'm not saying this in itself is a strategy. I'm saying how my curiosity drives the research. So, well, how would I deal with this? I don't know if you are aware of this, but my old friend who is no longer with us, God rest his soul and his memory, David Paul, the most amazing human being that I have ever met. Just such a warm soul, and I think we all speak for everybody when we say I miss him dearly. Left us way too early at the age of 68. Anyway, he had a contraption called the 4-bar fractal. Now the 4-bar fractal was essentially is this: if you close above, or if it's almost like a turtle trading strategy. It's the highest close of the last 4 bars, and if you close above the high or close below the low of the last 4 bars, that's a 4-bar fractal entry. Now, the thing about the 4-bar fractal entry, it is slow to detect a change, but what you're seeing here is essentially the same as a 4-bar fractal. You identify a specific bar, and you say, well, that's the one that's going to be my guiding light. Now, if we look at, I was going to say, let's look at the DAX right now. Do you see how bar 3? I can't show you right now because I want to just go through a couple more examples. So here's 810, and we close above it here, and that sets in motion a 2-3 bar push. But if you look at the DAX right now, well, what did we just do? Well, we just closed below the low of bar 2. So what we could do is we could say, well, you know what? As a human me, we'll sell short right here. If nothing else, then just as a, all right, we just done a bit of research. Bar number 2, which is this one here, we closed below it on bar number 3. So we'll use what's called a 1 bar stop. So we'll essentially say the stop loss needs to be above the high of bar 3, which is at 34. Entry is at 4. So we'll put a stop loss at, say, 38. Now, if I was to do a piece of research like this, what I would do is I would go through 2 or 3 years worth of data, because that's how I work. That gives me the confidence to say, okay, I actually want to bet on this strategy. But the reason why I like to do these things manually is because that also enables me to deal with how do I manage it in case the opposite of what I think was going to happen does indeed happen. This wasn't intended to be a real position, ladies and gentlemen. It was just a, shall we say, a marker, because you just get that little emotional, okay, we traded a on the spot made up approach, which, you know, does make sense, because a bar closing below a prior bar does have a degree of validity. Where the problem comes in the DAX is that oftentimes these, you see here, for example, this is actually a decent example because it closes relatively close to the low, and then the move comes. But oftentimes the close below the second bar comes much lower, and you're thinking, well, how much more is there left of this move? Yeah. And then we are where we are right now. As I said, I wasn't really planning on trading with you today because it's Wednesday, but I thought that with the CPI coming up later, and with the importance that CPI has on the market at times, I thought I'd come in and say hi and see if there was anything to do. We can look at the school run. School run will trigger at 92. We kind of almost double bottomed it at 92.7 versus 92.2. While the FTSE is staging a bit of a comeback. Albeit temporarily. What I love about trading is the research. I find the research really, really interesting. And the research gives me the confidence to put big size on. Because let's face it, it's when you're trading size, what do you want to be? Do you want to be right in trading a pounder point, 1 lot, or do you want to be right trading 100 lot? And so for me, it's the research that drives the confidence, so to speak. Yeah. My friend Andy, do you know Karaoke Andy? Karaoke Andy, he sent me a message this morning. He's doing some streaming himself. I should give you his channel so he can give me a break from time to time. Karaoke Andy says, traded live, made 40 DAX points on the espresso, now tuning into you. Well, hell, Andy, if you made 40 points, you're better off than I am, so maybe we should give you the microphone. Let's face it, you love getting the microphone, don't you? I will like to declare a public health warning here. If Karaoke Andy ever does invite you to go out to a bar with him, reject. Come up with, I don't know, feigned diarrhea, headache, I don't know. Because it's not going to be an ordinary bar. It's going to be a karaoke bar. And he will force you to sing. But of course, if you're into that, well then, there's your ticket for a good night out. If you don't, stay well away. Treat him like you might treat the devil knocking on your door. And then there's a guy who sends me a message from, I don't know, very, very exotic location. I think I'm going to have to share that with everybody just to tell you that we don't actually like you very much. And you have no friends. Is that going to be a theme now, that whenever you guys go on holiday, you're going to send me your holiday snaps and making me feel bad about my miserable existence sitting in a warm office over the summer? Christ, what I would give to be there right now, wherever that is. There's palms, there's swimming pool, there's sunshine. Wow. Okay. In case you want to see what Karaoke Andy looks like, here he is. This is literally Karaoke Andy. I warned you. Actually, that shows the person who sent it. I better delete that. Of course I could, Torbis. I just don't want to. I don't know, Benjamin. That does look a bit fake, what you just sent me. Okay, so we had a move lower. We're just going to run this. We're absolutely just going to run this. I know it's a tiny position. That's hardly the point. What I want to demonstrate is, how do we deal with the emotions? Just imagine this was not a pound a point, but 100 pounds a point. how would we deal with this? Okay, wow, we were just 15 points in profit or more, 17, 20 points in profit, and now we are losing. How do we deal with that? Well, has anything changed? No, not yet. No, nothing. Bar number 4 went below the lower bar number 3. Fair enough. And now we're back into the range. But has bar number 4 closed above the higher bar number 3? No. So let's see where bar number 5 closes now. Bar number 5 may actually take out your stop loss, in which case, problem solved. But let's just see how this evolves, because I think it's a great lesson in a somewhat secure environment to deal with, well, how do we process when the market does go against me? For example, did you see the DAX trade the other day where I shorted, I made money, and then the market dropped 100 points? Do you remember that? Do you want me to show you? Let's get rid of this. So, do you remember this? Right here, we had a short position or whatever we had, and the market, I take profit. It was a decent profit. Well, since that it was yesterday, we should be able to find the exact trade, right? So the exact trade was short at 24,126. So I shorted it about here. There we go. And closing the DAX at here. All right, so shorted up here, closed here. Don't know how many points we made, about 30 points, it says. Then the market actually just goes up to and supersedes my original entry by 6 points, and then trades back down again. And within 10 minutes, the DAX is 100 points lower. My question to you is very simple. You'd shorted up here, the market went 30, 40 points in your favor. You take profit. The market goes up, but imagine you had not taken profit and the market went up, and now your 30 points, 40 points profit was now into a 5 to 10 point loser, and then the market goes in your favor again. But before we deal with this, if you had moved your stop loss to break even, you were stopped out. Of course, you're going to be annoyed with yourself when you see the market doing this 10 minutes later. But I have to ask you a fundamental question. Is there any chance in hell that you could have envisioned that? Or did you just follow your normal process? That process that so far has enabled you to make relatively predictable profits over a continuous period of time. Because if it's the latter, then benefit from my experience, of course this is going to happen, and it's really annoying when it does happen, but it will happen. So right now, on this, shall we say, demonstration trade, well, I am actually, I've gone from being 20 points in profit to being 20 points in loss. With 5 minutes to go, I may get stopped out here. It doesn't really matter to me because it's the smallest size I can possibly trade. It was more for illustration purposes. It was more, well, how do we deal with 5 closing above 4? And the purpose of me developing the school run, for those of you who don't know what that is that I take the second 15-minute bar. That's this one here. So you see how I skip a number. So okay, 1, 3, 5, so forth. Bar number 2 on a 15-minute chart is the one that I bracket, like a normal breakout trade. That's what it is. It's a breakout trade. Now, over time, with the help of you, listeners, we have sophisticated that entry a little bit by taking into account the overnight range. So for example, you'll see here that bar number 3 went below bar number 2. However, according to my anti-hypothesis, whenever the school run takes place inside the overnight range, you don't actually sell short 2, you buy 2, because the DAX has a tendency to mess about in a trading range whenever it is operating within the overnight range. I'm going to have to caveat this with a saying not always, because I've also missed some great short sells in the DAX where it has just decided to go down to the low end of the range. So I wish I could invent that strategy that works all the time, but I think there is one. It's just buy and hold forever, and I'm sure that unless the world ends, I will eventually be a winner. So bar number 3 on the 10-minute. So you got bar number 2, 3, and 4 have all made lower highs. Now bar number 5 does actually now trade above the high of bar number 4, and my bet here is that bears are looking at bar number 3 and think that's a bit of a road sign, so they're selling above the high of bar number 4. That's what I would do. That's a buy above prior bar high. Because if this is indeed a trading range, well, then you're selling in the upper end of that range. Let's say that range is from 1's high to 4's low. Now let's say that we were trading full size. How would I feel about that? I would be, well, I wonder if I would have moved my stop loss to break even when I was 25 points in profit. The odds are definitely there. Now, how would I have dealt with if I had added to the position? Well, that's where the overnight range began to play a significant part on my repertoire, because through manual testing, I realized, well, hang on, it doesn't seem, school run doesn't seem so stable when it takes place inside what we call the overnight range. Now, let's make one thing clear. The overnight range is self-defined. I have defined the overnight range as approximately midnight European time to about 6 or 7 in the morning European time. Others may include an hour before, maybe an hour later. I don't think that that makes a significant difference. But going back to the 10-minute and the original hypothesis that we were working on, we had a close at 3 below low of 2. Has any of the subsequent bars managed to close above or below? No. Now, one could argue that a close above or below is somewhat arbitrary, but I don't think it is, because I think that there is perhaps an effort by certain parts of the trading community to get the kind of close that would trigger certain mechanism to kick in all right, we're closed above a high, we are going to kick in a buy program or a sell program. And I think that is somewhat known. For example, it became known that turtle traders bought a 20-day high, and shortly after, and Linda Market Wizard Linda, whose surname I can't, Raschke, she argued, well, we should do the turtle soup, I think she called it. Turtle soup was basically sell short a 20-day high, because the market is going to surge above and then come back in the range, because everybody's going to front run the turtle traders jumping on the trend following bandwagon. Anyway, so with a few seconds to go, this is going to get really interesting, because 5 closed above the high of 4, not above the high of 3, and not above the high of 2, but it did close above the high of 4. And so that to me would suggest, right, we should probably be on the long side. Now, right now, I'm on the short side. Doesn't really matter because it's an insignificant position and I got a stop loss in place. But to me, observing if the market close above and below is significant. Now, one thing that is talking against the long position is I think we are in a trading range. I think we are actually showing the early signs of something like this. So if we quickly go through all the CPI DAX days again, you'll see, I'll show you. That unless you get real strong bear bars or bull bars closing, yeah, inclined, if you don't see follow through, it's probably going to be a trading range day. What we are really looking for is something like this: close, follow through, continued follow through. Right now, what it feels like is this, with a lot of overlap. Most price action traders will use 5-minute. I like to do my research on 10-minute because I find that the signals, albeit a little slower, gives me a greater statistical validity. See, that's what I think today is looking like right now from the 11th of September. Just focus on this area here. Okay, ladies and gentlemen, I did have some doubts whether this was going to be a meaningful trading day with CPI. I'm glad that I did what I did. I think it saved me some money. The news is out in about 5.5 hours. 4.5 hours, sorry. So I think I'm just going to retreat into my research corner. I would need to see this DAX begin to close above prior bar highs to be convinced that we actually got a trend move going on. I don't really see that right now. We're still within the context of bar number 2 and 3. And yes, I am aware that I'm probably going to get holiday snapshots, and actually I welcome holiday snapshots from exotic locations from all over the world on your summer holidays this year. If you are going on holiday, it would be lovely to hear from you. Of course, I'm going to be here, at least for a fair while longer. I'm going to let that pounder point position just run with a stop loss at 38. So thanks a lot for being here with me this morning. It was fun to just talk about how I do research. I think that's what makes me love trading, is that the solitude of identifying patterns and then seeing them in real time and acting upon them. I know it doesn't answer all the questions that you may want to ask of me, such as how do you scale up for bigger size. I think that comes from experience, very targeted experience and practice. And dare I say, seeing it. Visualization seems like such a new age concept, but I've imagined most of my life. Very vivid imagination. And seen things that I wanted in my life. Imagining scenarios, how I wanted it. Okay, be an interesting morning just from an observational point of view. Looks like I'm going to get stopped out. Would you trade too high as a school run? Yeah, the way that 3 and 4 has developed on the 15-minute chart, I think I would. I'm probably going to take a 30-point loss on this size here. That's fine. It was a good illustration, I felt, and it gave it a somewhat of a more of an emotional charge. And with that emotional charge, you paid more attention. Thank you so much for being here. I won't be trading the CPI with you, but I'll be trading the US with you. Thanks a lot. I will see you later today. Bye-bye.